So our net income, MPW's net income in 2022 was $7.7 million, and that's a little more than double what we had in 2021. It's also substantially different from what we budgeted for 2022. It was a loss, actually, of $2.6 million, so dramatic difference. Now, why the big difference? It's largely driven by what's going on with the markets. MISO markets, where we sell our energy into MISO, then we buy it back from MISO. But we sell the energy from our generation into MISO. Those markets went off much higher because the natural gas prices were higher, and I'll show a graph of that later. But our generation was higher than budget, but it was actually lower than what we did in 2021. The sales into MISO were $47 million above budget and $33 million above 2021. So those are just really big numbers for a utility our size. You can see here for each of the three utilities. So the first bullet point there is for electric, and it's the 3.7% above budget, 15.5% below 2021 for the net generation. And then water sales were down from 2021, but 2021 we had a big increase in our industrial sales for water. So we maintained that level in 2022. Communications margins, $400,000 better than 2021. And that's as we continue to improve our internet margins by about $300,000. You can see there on the two graphs the sharp differences, especially on the electric side. So compared to budget, compared to 2021. And you can see the history there of our net income. So the crazy energy markets, the spot natural gas prices averaged $8.81 in August. That was the highest peak. And then we saw energy prices, what we sold into MISO, at $101 a megawatt hour. So if you think about that, that's 10 cents a kilowatt hour. And if you look at many of the rates you have, they're obviously below that. So, but with our generation, we were able to hedge and keep your energy prices low. So looking at that graph there, the top two lines are energy prices, what we sold into MISO, what we purchased from MISO. And you can compare that to the blue bars. Those are natural gas prices. So gas prices really started to increase in April, and they peaked up in the summertime. Then you compare that to those lower set of lines for energy prices, and they're much lower for 2021. So if one of the things for when you think about the rates for MPW, we kept them steady. We didn't have EACs. We didn't have an unusual rate increase. There were a lot of utilities in the U.S. that couldn't do that. When I looked at national EIA numbers, for example, for residential customers, it was above 15 cents per kilowatt hour. Our rates were about 12 cents per kilowatt hour. So there's a substantial difference, and that difference was driven by a lot of utilities trying to pass through high natural gas costs, high energy prices. There were other utilities that couldn't get coal, and so they had to buy from the market. So we had a good supply of coal, we had our generation operating, and we're able to keep our rates steady. So this next slide, you can see a 5-year history of natural gas prices, and in 2022 is when they really took off, about April of 2022. That period there of high gas prices is over now almost. So if you look at natural gas prices today, when I looked at the futures this morning for March, they're $2.50. And the prices here show that they were much higher. In 2022, the biggest sustained period for for the last 5 years, but if you look back further than that, it's the longest sustained period of high natural gas prices. There was one of the reasons that prices dropped. There are two things. One is that we haven't had much of a winter as far as weather, so natural gas prices have dropped. Production is high, but an LNG facility in Texas had an explosion and fire in June. It's still not running yet. I don't know when it will run now. They keep saying it will run soon, but that was 2 BCF per day of natural gas that was being exported. So it's a huge impact on supply and demand and keeping those prices low. So for where we are on our cash position, so we did all these things with in 2022. We expected to reduce our cash position. We were able to maintain it with the high markets and the higher net income. And we did that even with Ryan spending significant dollars on Line 106. So a bit less than budgeted, but so we were able to do that without any borrowing, which was great. CapEx, when we look at it, our capital expenditures, about $15 million less than budgeted, as I said, but it's still significant expenditure and not having to borrow any funds. So these next 3 slides are just a little bit about projections. So powering the future, we've got the solar PPA in the chip unit that would require financing in future years. We've also got some other big projects, the Grandview substation, which is related to, in part, to getting the solar project done. That project's about $7 million. We've got plant cooling modifications to keep running the coal units. That's about $6 million. And then the new customer information system that'll hit capital this year. So inflation, we've got it budgeted pretty low. You see 2.8%. That seems real low right now, doesn't it? But in 2023, a lot of what people did is put their budgets together with higher numbers than that. And we just think inflation will drop down going forward. Our investment rates, we targeted 3 to 3.5%. We're doing better than that right now. We're doing 4.5 to 5% for our investments. And with $80 million to invest, that's good for you as customers. With natural gas prices being high, we had anticipated they'd still be high in the first quarter of 23, but they will have dropped, and that will impact our results in 23. We won't see the same kind of net income in 23 as we saw in 2022. On the water side, we've got our plans are for well rehabilitation, and we're trying to meet water demand pumping by delaying wells or not putting in as many new wells, and that will save capital dollars going forward. Still evaluating it, but we're optimistic. And then large projects, some of you probably don't know we have a reservoir behind Walmart, so it's a little hidden back there, but we have to spend some money to get that refurbished, and it's significant. We're also doing the West Hill sewer separation work for our part of it, the water part of it. That project started for us, I think, in 2014. It started for the city before that. Won't be done until 2028, but there are very significant dollars associated with that. One of the things we had to do on the water side was borrow some money from the electric utility. So funding some of the projects we have on the water side. So that's a $2 million loan at for 7 years at 4.5%. The planned rate increase shown there is what we have in our budget right now. It's significant. We've had a couple things going on. We've got the higher capital expenditures, but we also have higher chemical costs that have gone up about 69% in 2022. And it's also, their prices are about double what they were a year ago right now. That 8% won't necessarily be the same for all classes of customer. It could be different. So we're doing a cost of service study right now. We'll be talking to our large customers about that in the near future, and still need to evaluate that with our Audit and Finance Committee and the Board of Directors or Board of Trustees. Unit 8, sorry, Holly, Unit 8 is one of the reasons for that increase as well, because with taking 8A off, we're using less water at the plant, and that means that a lot of those costs have to go back on other customers now rather than having the electric utility pay for some of those costs. On the comm side, Erica talked about NOFA 6 and 7. Here the dollars are shown that NOFA 6 is about $1.5 million, NOFA 7 is about a little over $1 million. But you see the significant grants that we anticipate getting, up to $500,000 for NOFA 6 and up to about $700,000 for NOFA 7. Erica talked about internet restructuring and that that will keep rates actually lower per for what the speed you get. So, but we're not planning any increases on the internet side. We are anticipating increases on the video side of about 6% per year.